Hello, everybody. How you all doing today? After a nice weekend? Oh, it was a mixture weekend. Kind of cold, kind of hot, but not bad. Okay, so I'll continue to your week of emails. I keep seeing them; they're great. We will continue to update you throughout the week. So definitely, if you still didn't get on board, continue to email me. And like I said, we will keep you updated during the week, and also follow the social media if you miss anything as well. Okay. All right. So coming into today, so what we're seeing so far in terms of the equity markets, definitely a very strong rally off of the higher time frame demands, and we have been holding overnight demands on our way up so far. And then we'll go in to see the supply level we've hit, and we'll discuss that too as well once we get into the charts. But just realize where we are today. We are not at really fresh areas, and that's something that we should discuss too as well. And the dollar, of course, is very range bound, even after everything last week, non-farm payroll, BOE, Canada, everything. It's still extremely range bound. And the other thing is tomorrow. So today we'll concentrate more on futures. Tomorrow we will also add in a little bit more concentration on the stocks and ETFs. So that'll be coming tomorrow when we do our session. Okay, and support is here as well. Answer all your questions. Yeah, and great to see a lot of you that normally I see. So hopefully everybody's doing great. All right, let's get into the charts. All right, so what did we have so far overnight? Well, yes, let's start with where we're coming from. So this was our last overnight demand that we had from a 5-minute overnight demand that we had from last week. Came down and hit it during the early morning trading session. Rallied all the way up in price and came up to our 60-minute area, which is right up inside of here. So large area, but you could see when you put it really into two zones, you break it down into the upper zone and the lower part of the zone, came into the lower part of the zone. And now we've continued to, and it's interesting too, right? If you've been listening, all of what has been going on, it's all the stimulus that's been going on. Then the other countries also saying, China also saying, well, we're going to provide this stimulus as well. And then Europe now trying to open up. The UK is trying to open up. Some states are trying to open up. So it's all, if you notice, it's all positive things coming out, but yet the market is falling back. So a lot of these things are just already into the market, and then once it actually does happen, the opposite happens, right? So it's always important to keep that perspective too as well when you're listening to the news. I mean, the beginning used to be like, don't get me wrong. If there's something that's surprising that comes out immediately, it's going to jolt the market. That's for sure. But if it's something that's been talked about, over talked about, and you've been hearing about it, more than likely, it's been into the market. So you can see we've fallen pretty. Anybody take, if you want to share anything of what you've taken, either longs or shorts, you could put it in the chat if you did. But the you can see what I want to point out at the moment too, though, in terms of the equity strength coming into today is all the circles represent overnight levels, right? So that means since we've had this move up in equities, all it's come back to are overnight levels that we've had. So you can see we've had overnight down below, we had an overnight into the next area, then the next area, and then even coming into, so now is the first time, well, are we going to start to break some overnight levels, right? So this is also overnight. So you can see almost the last four demand zones are all overnight, which is actually showing you pretty good strength coming in from the equity markets, because they cannot even get down to, say a lot of times if we look for below the Globex low. Okay, excellent. Nice short. Awesome. And so now you can see, so what you can do yourself is, if you are trying to manage it in some way, if you have a specific target, or if you're trying to do more of a trailing stop, so every time a new supply zone forms, you can move your stop down and, do it that way. Or if you just have a specific target, you hold on to that specific target. So now what today is, okay, so where we're coming from, you can see this 240 is really right off of really this bit of a gap here, right? Like this whole gap area here. So we're basically falling from there. Now we had a pull back into here. And so now we started to fall from here as well, right? So you can see what it looks like coming into today. I think what the challenge with all of this is, so don't get me wrong, I'll do on an everyday basis, like the day trading style, that's what I'll do on an everyday basis. For these longer term play, you got to be a little bit more selective. So if you are trying to trade in the middle, you have to decide, well, okay, not every trade. I know everybody wants, like, okay, this is a specific, I only trade, like, say for instance, you say, I only trade 3 to 1, I only trade 5 to 1, or blah, blah, blah. But if you got to listen to what the chart is telling you, right? If you only trade and you want those bigger moves, the 5 to 1, 7 to 1, you're going to have less trades, and you're going to be more out at the extremes when we hit the fresh levels, and they come quickly. But if you're in them, you usually get the bigger moves, right? You at the fresh levels, Once you start getting more in the middle, the chart is not going, the market is not going to go by what you need to make a 3 to 1, 5 to 1, or 7 to 1. They're just going to go by what is happening. And if new supply is formed, new demand is formed, they're going to go by that. It's not going to go by, you have to realize that when you're trying to place your targets. So as we start to get, more and more inside of this area, and you're still trying to go for your same, 3 to 1, 5 to 1, 7 to 1 inside of here, more than likely you're not going to get it. Is it eventually going to break out in a direction and start to move? Yeah. And if you're lucky to get on that side of it at that time, sure, you can get that move. But when you're inside of here trying to get that initial, I'm going to try to hold out for this one and then move my stop and this and that, you're probably going to get knocked out, or you're not going to make it to target. So just be aware of that when you're trying to, like, know where you are in the overall general scheme of things, right? You bought down near these lows, you have a much better chance. Now you start to buy or you start to short, now all of a sudden it becomes ugly inside of this area. And like I said, it doesn't mean you can't do it on any sort of day trading side, that's fine. But when you're looking for your longer term picture, it does become messy. So just so you know. Yeah, just so you know, for those of you. All right, so now look at it where we're coming to at the current moment. As we drop down, we're going to hit into, you can see this demand that's right underneath. And so it can very well work for you, but you can see it's all in the middle of this whole scheme of things right here. So if you are going to try those type of areas, like I said, I would do smaller position size. you know, definitely look for the opposing area and, you know, take it from there, from that. Above current price, we still have the 60-minute areas where we have the 30.002 up to the 30.81. Inside of this, you are going to have some smaller time frames. Right, you could see up above at the 5-minute, you are going to have an area inside your 5-minute. Right, that's right up at the 29.22, 29.25. And like I said, it's just realize where you're coming from all this. And down below, same thing. A lot of these have already been tested. You know, once you come into that 240 area, you're going to see too. A lot of it is also going to be tested, you know, right through here. So this is kind of your 240 area right now. So it's not the greatest looking. So usually if you have new supply, it's not going to be that great. It can offer some sort of a bounce, but it's in the middle. And then down below, you have some overnight areas as well. But like I said, everything's in the middle. So just be careful. You could do a little bit more confirmation or however else you try to trade within it, or you could just stay away from it completely, given that scenario. All right. Now let's go into, yeah, you could see too, if you break more demand, you may have some more supplies forming. So it is moving rather quickly. And we are, you know, with all of this, the markets look just as confused as what, you know, if you listen to overnight, the UK's opening up. People are the ones that are supposed to, you know, if you, it says if you can't work at home, then you try to go to work. But then the mass transit really isn't open yet. So then it's like, how do you get to work? Do you drive yourself? Do you ride your bike? Do you or do you wait till tomorrow to wait for a mass transit schedule? So everybody looks like they're in a bit of confusion at the moment, and it looks like the markets are kind of uh, in that sort of way too. Like I said, this has already been priced in, so now we hit some supply, we're falling back, and it looks like it's that same thing with the what I'm seeing with the inverses too. Like what we usually look with the inverses, that looks to me like also it's you know, usually it's inverse the market, and it's not always at the case at the moment. So. But anyway, let's go on to the next market. All right, so for the Nasdaq, so you can see the same thing here with the Nasdaq. We were holding the 4 hour zone for a while. We finally made up a little bit higher. It is the stronger market in general with the technology and the FANG stocks. And you can see it's still making pretty good highs. Again, with the NASDAQ, it did hit into overnight demand on the move up, right? So we had this overnight demand on the move up. And same thing as the other markets, it has been very, very strong in terms of pulling back to just overnight demands, right? So overnight demands, overnight demand. We happen to come back to this overnight demand, and we started the whole rally from this day session demand. So this is how the whole rally has started. Now starting to fall back a bit. And again, you're going to have those same type of areas right now. The 5-minute supply, overnight supply, is coming in up at the 92.42 to 92.49. And yeah, you could definitely keep an eye out on if we start to break these demands, if these start to form some overnight supply too as well. So you could definitely keep an eye on that. I would watch to see if it actually breaks the closer area right down below, and then they could be new overnight supplies as well. And let's see. Yeah, and you could see because we pull back to quite a bit of these areas down below. So, you could get another move out of them, but you could see where the fresh area. So if you do get some good volatility, there is room for a sell off if we were to get that. There is room. All right, let's take a look at the small caps. So yeah, that's okay. So if you would like to see it break some kind of the near demand, right? So whatever's, how many of you have done this where, okay, so say for instance you've taken a short, right? And you're saying, yeah, well, okay. I know I'm being a little aggressive, but it's all right. I'm going to take the short. And so when you first take it, you're like thinking, well, as long as it gets, like, say for instance you took a short up here, and then well, as long as it gets here, I'm going to get out because it's a opposing area. I don't know if it's really changed the reversal yet, so I'm going to get out here. But then prices start to drop pretty quickly, especially when you get that big flush. It's like boom, and then you're like, whoa, no, 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 I'm not getting out here. I'm gonna move it now. No, no, that looks like it's going here. Yeah, let me move it. And then the minute you move it, that's when it already all of a sudden it's all the way back to here again. And so when it comes to that, it's better to take out demand and then to form a new one. But of course, there's always going to be that time where you say, I'm going to take that chance, right? I'm going to take that chance because, all right, I know the S&P is up as supply. So if I know the S&P is up as supply and I see a little supply here, and even though it didn't break demand yet, I'm going to take that chance because I know the S&P is up as supply, right? So that's a different scenario than, anytime you're trying to, oh, let me short, but let me see if it didn't really break demand, but I'm going to try to hold on. It's a slightly different scenario. So if I want to say, yeah, you do want to wait for it to break it, yes, but at the same time, could you miss a move? Yes, also. So there's no perfect way to do it. If you think you're at a good area, if you believe you're at a good area, which if you can see it in your other markets and you believe it's a small risk for you to take and you're willing to take it, knowing because believe me, just as many times as this is going to work out, it's going to not work out because you aren't at a good area, because you're thinking, oh, it looks like overnight supply looks okay, but you're not really at anywhere, and sure enough, the demand is the one that holds and takes you up to new highs. I mean, I'm sure you experienced that many times too. So, you know, do just do it as much of you can put your analysis together as you can, and then take the chance if you feel like it's worth it to take the chance, is what I would say. Okay. So here again, right now, I do believe that higher areas are going to be your fresher ones up at the 1355, 1363. Even that, it's been through an area and then started to fall, but it will be fresher than this one down below, which is your overnight that is formed up at the 1330 to 1337. The reason why I could see if these could still work out is if the rest of the markets get some weakness, and usually the Russell has been the one to be a little bit weaker than the others. Yeah. So that's the only reason why I would say that with these lower areas at the current moment. You can see how the Russell is lower. The Nasdaq is way up towards the highs and making new highs. Russell is just barely getting back halfway and struggling to get back to the previous high. So that's why you can see there is a difference within these indexes. All right, let's go look at the Dow. So same thing here. The Dow is kind of sitting at this general area in the daily. You can see this large area right there. It did get back to a zone, and we are just kind of camped out in there. And we did try to drop from there, hit a little bit of demand, now came up. So to me, it is getting tighter, sitting up at this 24,000. 26,000, 27,000. That looks also significant because if you remember, a lot of times when we were moving up, they're talking about, oh, the Dow's breaking, and then coming back down too as well. So that whole general 26, 27,000 looks like also important area at the current moment. And now we're just basing inside of this supply zone, hitting demand zone, supply zone, demand zone. So now again, hit a little bit of supply, going to test down into a little bit of demand, and now the next wave, whether it be, are we actually really going to get more stimulus here or not? That could be the next driver of this overall market, but. So now that we take a look at things, we do have some overnight areas, so let's first take a look at the 60 to see where really upper area. The upper area that we haven't hit yet is really up at that 24, 576, 24,718. This is an overnight that's created from yesterday's drop. And if you ever want to know, you can just see on these pictures here where they actually, the overnight high, right? You can see here where it was made. That's pretty much in Asia. Right now, it's still making an overnight low. The overnight low, and this is like pre-market New York. So this is a very large range, really. You're coming from our supply zone at the 2940 and actually hit up into about 29, above 2945, down to the 2895, below the 2895. So it's a pretty large range overnight, as you can see. On the 5-minute, this area here is the 24,267, 24,297. So like I said, these are overnight supply areas inside of yesterday's drop. Well, not yesterday, but the opening, pretty much the opening of the week. How many of you like to do analysis on? How many of you like to open your charts on Sunday, or you like to open on Monday morning? Just curious. Because you can see who likes to open it up Sunday night does get the, does get that. If you didn't do a set forget, does get that entry in. And then other of you, if you just want to, because you're busy or something and you want to wait till Monday, then you're trying to see where you can get in. So I'm just curious what the overall look of things are. On the 240, what we see is above and below current price, a lot of room there too as well. You can see the fresh area of demand is really coming in closer to the 21,952, 21,645. And again, these middle areas, right, it's already going through one, as you can see. Pretty easily try to take that out because we are in the middle of the zone. So that's why you can see easily to take these, we can bounce from the second one, but you can see it took out the first one pretty easily. Okay, so a lot of you like to look on it on Sunday. Yeah, and you know what the good thing about that too is markets are a little bit, a little bit slow, and or they didn't even open yet. So you kind of have that, like when you're trying to figure things out when the market's moving, then something else is always catching your attention, right? So it's like, oh, I'm trying to concentrate on the S&P, but the crude oil is moving over on this side and the gold is moving over there, and then you're moving the currencies, and then all of a sudden you see the S&P moving. It's pretty hard, right? So having that quiet time to do it is nice. And then some of you, if you're a little bit more, perhaps more day trading, then you say, well, I don't really need it. I think I just need to come in pre-market and try to do it. But some of you, of course, if you're in Asia or in London, it can vary for you too as well, because you may not need, not like in New York, the New York sessions. It's your early morning is a little bit different, so that's okay too. But you'll see that Sunday night a lot of times, because Asia didn't really get to trade the end of, especially after a non-farm payroll. Asia didn't really get to trade the initial reaction off a non-farm payroll. So typically you get the beginning of the week starting out in that direction that happened in non-farm payroll, but then once it starts to filter into Europe and into US, then you start to get the post reaction. So it's a little bit backwards on the Sunday after non-farm payroll. All right. Let us take a quick look at the Nikkei and see what they're. Not bad, holding up fairly decently below the next overall daily. Came back to the same 60-minute, went deeper into it. So same 60 minutes been holding. It rallied all the way back up, and now coming deeper into it. But it hasn't really dropped out like the U.S. markets, though. You can see there now have remained. And that's basically, China coming in and saying, they're going to help with any kind of stimulus that's needed and such. So, all right, let's move on to the bonds. Good morning. So, okay, so yeah, well, if you look at it and initially see if you, all right, we'll come back once in. Not a whole lot to do in that bond, but if you look at it, so yeah, I mean, obviously, so when the market's moving up, right? Everybody's complacent, everybody's bored, right? And your 401k and all your long-term holdings looks absolutely wonderful. So that's not a big deal. But if you're doing some day trading, you're like, ooh, this is like really slow. This is, so you say, yeah, let me take these 5-minute ones, because it's not going anywhere else. The S&P is barely moving, every day. So it's moving up, but it's, some days it's about, when the market moves up, the VIX gets, really low. So now all of a sudden you're saying, yeah, let me take some. But then all of a sudden this comes and you get knocked out of almost every single one of your, small time frames, right? Because they're almost, all of them don't hold it, except if you're on the right side of it, then maybe you look like you're golden. But other than that, you're getting like smashed on every one of them. And then you start to come back up again. The volatility is still there, and you're still getting, knocked out of things, because, people are trying to decide, do I want to, sell, buy, sell, buy, sell, buy, sell, buy. Then it starts to move up. Then it's like, okay, now more people coming in. Then you start to get those holds of it all. And then probably when you're going to get comfortable again, it's probably going to pick up again, and it's not going to hold again. So we're definitely still in a overall I would say we're still in an overall, you got to watch out for volatility to come back. But because the market's gone up, you do have complacency again. And you can see that very well with the VIX here. Very well with the VIX. So ever since that whole move in the market, right? Ever since I'll move in the market, we look at how it's been since the bull market. Now with that whole incident happening, now all of a sudden complacency after we hit demand, and we've continued to, with the stimulus demand, and now things are starting to possibly brighten up. We're starting to fall back down again, and it created some supply zones, right? So that was showing you, yeah, volatility is going to continue to drop. And now you can see we're getting back to, well, this is your first little area, possibly a little bit of volatility. And then down at the gap is another bit where if you're going to see pickup in volatility again, right? So those are kind of the two places kind of to watch out for, back to this wick and then back down below at the current moment. So if volatility is going to pick up, that can be the scenario, but definitely you can see the whole reversal of this, and it's been, you take a look at the, as long as the market's moving up, this is what you get, right? And then once it's not, that's what starts to happen. So if you start to see big spikes in this back again, breaking supply, then you probably know, all right, let me go out to my higher time frames again, right? Yeah. Uh, so what I'm seeing with the dollar is the dollar's extremely, extremely range bound, and I feel like it's somewhat. I mean, I am not positive, but I feel like it's somewhat to do with, because it's like it's a global. It's a global movement right now, right? It's a global movement of who wants to provide stimulus. So before, it's the Fed. When the Fed came out, yeah, they provided a huge amount and things were falling. Now it's possible that they might still come out because unemployment's so bad and things of that nature. But then you also are having China, Europe, all the other countries also coming in and also providing it. So now it's a little bit more of a range-bound tug-of-war type of thing going on. The dollar is still going to be your overall, global safe haven. However, who's going to provide more? And I feel like that's kind of taking over the dollar at the moment. And so there's not a clear inverse relationship to any of the other markets, besides, of course, the euro, because that comprises almost 60% of the dollar. So that's different. But other than that, no, I think it's a little bit on its own at the moment. It can pick up steam if we see a big stock market fall. If we see a big stock market fall, then yes, then the dollar can go back into the buy dollar mode, because it is the global safe haven. But for right now, I don't feel like it has that effect at the moment. Yeah. Uh, yeah. Exactly. Yep. Just like what the support is saying. So. Uh, All right, excellent. So let's now go take a look. TY, there's not a whole lot to look at. The 10-year, it's range bound as well. Very, very range bound. Holding strong, but very, very range bound. Right. So it's really just holding between our two zones, and now even become even more so inside of this whole area. So to me, it's not a whole lot to do with the 10-year. Let it play out. I mean, it has been what's the longer term one, the 30 years, the one that's been the one moving down. And then the 10-year and the 5-year is the one that's been the stronger one, right? So that kind of makes sense, you know. Uh, and same thing here with the 30-year. What we have is a continue hold of our 60-minute zone down below because it hit the first one, it rallied up, and then eventually fell down to our second one. Never made it back up to the fresh area of the 240, so that's still definitely still in play. You do have some 15-minute, but just know that the 15-minute zones are inside of here, so it's not your high quality zones. But for those of you that want to watch it as it gets there, see if there is these are the kind of two areas, and you can see this one, the 181 to the 181.10, and then overnight at the 181.16 to 181.20. But it's just not in a great location wise place. Yeah. All right. Okay. Before we move on to crude, let's just take a little look at the overs. Take a look at that. Oh, where did the DAX go? Come back. All right, so the DAX is the one still showing some kind of weakness today. Eventually did meet the gap and did go up a little, hit the 15-minute zone when fell from it, then went up a little bit higher, not quite up at the 60 though, but you can see it is also starting to fall back. Now it has still this 60 up above, and this one in general, the German market, it's been news back and forth between, I think now the EU is trying to go after the German court now. It's a whole mess there too as well, and on top of the opening up and being not clear about anything, so you can see we are still having weakness inside of this market. Still didn't get back to the 11.062 to 11.148, and has this 30-minute inside of that last fall, which is up at the 10.933 to 10.981. Yeah, I haven't taken a look at that. It's been a lot of talk about that lately. I hate taking a look at things after they've been talked about a lot because I feel like that's where they're trying to goat you. They're trying to, you should be looking at that before when everybody starts talking about it, then it's like, well, watch out. But yeah, it's been in the news quite a bit talking about that Bitcoin. All right. Let's go on to crude. Crude to me hasn't moved a whole lot from the last time we were here. So actually just take a little pop from it. Hit the 5-minute supply last time. You can see now it's starting to move back up again. To me, it looked like it was just in a hold zone. If you take a look on the 240. All right, so to me it looked like it was just in a little bit of a hangout hold, and now we did a little bit of a pop, but if you look at the 240, it really hasn't done a whole lot lately. And these looks like the upper zones are mainly tested. I would just keep an eye out on them. I mean, it tested 3 times already, but it did barely test, so I wouldn't put something. I would just put anything there, but I would watch out to see if it can still hold, and if it does create some more supply in here, it's a possibility. Otherwise, you can see there's not a whole lot after right, and you have a pretty big open gap above all of this, so there is some 30-minute demand. So the 2 lower ones are the ones I see looks like it's fresh which that's coming in at 2085 to 2059 and 2033 to 1996. These two up above, this one overnight has been hit once, that 2142, 2110. This one hasn't quite been hit, but to me it looks fairly close for an overnight level. So I just keep it up on here because it is right below the lows right now. So if those of you looking, a lot of times if you're looking at well, we're just bouncing around this daily 50, aren't we? Let me see this on a daily. Yeah, so we're just hovering, right? Because remember, when a pretty big move down, then you start coming back up, you're going to be testing these areas again. So this is where it's been hanging out at recently, right? And then this, by the time it gets up to those gaps, is going to be testing that 200. That's going to be another big area too as well. But you can see crude oil is a little bit different in terms of when it opens. So it's still creating its overnight high. It's over the way it's moving. You never know. It might not be done creating overnight low either. The way it's moving, but you can see the range now within it is gone. A couple less than $2 within this overnight high and low so far. We're just gonna take it to 20. Yeah, really hasn't. I mean, this is where it closed on last week, so it really hasn't moved a whole lot. It looked like a lot in the overnight, but it really hasn't moved a whole lot from where it closed last week. Yeah, just be a little careful with it today with the crude oil. All right. Let's go to nat gas. So nat gas, yeah, showing some, it's showing some pretty decent strength, but again, when it also went to test back up, I believe it also went to test back up into, let me see if I can see it here. Yeah, so you can see nat gas went up and hit that daily 200, and these are not always important, but because this market was in such a down, same thing with crude oil, same thing with nat gas. When they move into such a downtrend, that's why they do become important. Like the first time, right? You can see a first time back here, first time back there. Those are just like places where people just generally look at if they were trying to get long or such. And so now coming back, you're going to get some people looking the other way. So we've definitely had a big shift coming back down. Now we're testing, back down to that previous daily 50 again. So you could get some buyers coming in through there again. You do have some, so you can watch out for that if you start to get some buying coming in. You do have some close supply at the moment, which is 1878 to 1890. And then, of course, on the 15 minutes, going to be a little bit higher, 1905, 1913. Looks a little bit messy, though, in general. It'll be interesting on a new move down. There's some decent demand in there. But right now it looks a little bit messy where it is. It'll give you a chance. Usually with this market, if it's going to show some strength again, it should be able to give you a chance if it's going to get back in. All right. Let's move on to gold. All right, so gold already went between the two areas already. So the two smaller time frame areas already went through. Looks like it went through the demand now, hit the first supply, went back down. Now looks like it's trying to move towards the next area, which is up at. So remember with all of this on gold, the reason why it's kind of bouncing, don't forget this. So some of you just may want to completely stay away. Where we had this area here from the 60 demand, 60 supply. A lot of you took inside of that area. Then we came back into the 4 hour, right? We came back into the 4 hour here, and then we dropped down into some demand. So now these areas, I mean, there's not a whole lot what we could say, but just emphasize, we came down to this demand. We did try to move up a little bit, then move a little bit lower inside. Now you can see this area up above. They're all inside of this whole range that's getting smaller and smaller and smaller and smaller. So you may choose to not trade gold at the moment because of that, and that's fine too. And if you are, just know that your probability is getting lower and lower as we continue to move in here. All right. So with copper, like I said, copper, Aussie, they look like they're moving a little bit more with the stock market. So when you start to see that little falter in the stock market, these markets usually falter too. And if just not normally, but in this scenario, because you're having to deal with just the world getting back on its feet and everything, and having to do with China and everything. So it is affected by the stock market at the end, but not. It's not always like that. Otherwise the stock market charts and these charts would be the same. It wouldn't. It's nowhere near the same. But at this current scenario, with what's going on, it has been tracking a little bit more of the stock market move. So you can see it also. Copper has also fallen back. Also looks a lot like, same thing with the little pullback, making a little bit of new highs, now struggling a little bit. You do have some overnight supply coming in at 2403 to 2407 and 2408 to 2411. On the 240, it looks like it's kind of hanging out at this ugly little demand. But remember, too, it's been coming off of, this previous demand, too. It looks like it hit it again and then came off and made that new high. So, again, these lower ones can work for you, but it is going to be inside of this overall range, too, as well. All right, let's take a look at the dollar. So the dollar, the dollar was sitting near this overall zone coming into non-farm payroll. It did hit into the first little demand, did try to rally up, but hit the same supply. And the second one wasn't that great. You can see it was able to continue lower, and now we're kind of, there's not a whole lot to say with it. So if you're trying to use the dollar for some kind of, is it telling you something at the current moment? It's really not telling you anything, except that be careful, because this is what it's been doing, and this is what since with all of this is, you had the coronavirus, you had the Fed come in, and now, the next move, like I said, is more than likely either we are going to have a change in the stock market, which would affect this, would more than likely make that go up, or if a stimulus is coming again, then that would, I would say, take it down. So that looks like if it's going to be big news, what's going to move it, because nothing else was moving it. Other rate decisions, other the unemployment, anything else doesn't look like anything is really budging it a whole lot. So it needs something a lot greater to make this move, and so far that hasn't come yet. So when we go into euro, know that too as well. Okay. Well, think of it this way. So if you think of, so if you go and take a look at how the dollar is comprised, it's going to be what, about 56, 57% the euro. The rest of them, I think there's a basket of six or so. The rest of them are more 19%, 12%, 6%. So it gets very low. In general, what happens in normal situations is when the dollar moves during our New York session, it is going to affect these currencies just because there's kind of nothing else that's going to be affecting it at the moment. So the dollar is the one that's going to be. So if there's a big dollar rally in the New York session, you're going to have a drop in your currencies, in all the currencies. However, when we go into overnight, now other things are going to take over. Right now, it's only because we're having this whole situation between stimulus, the virus, all of that's going on. So it has a direct effect on everybody, right? But when a normal situation without all of this, what's going to happen normally is you come into the overnight where say we start with the Kiwi and the Aussie first, and their own economy is going to come into play. So their own, GDP, unemployment, retail sales, all those things start to come out at the close of the New York session. So you have the Kiwis that's going to come out first, then the Aussie that's going to come out next. So typically those markets are going to be affected by their own reports because that's directly affecting their own economy. Now, when you come into Asia, they can affect both Aussie and the Kiwi because a lot of the they use a lot of the mining and other imports, so that's going to also be affected. Their own reports can also affect what's going on inside of those markets too as well. So then that you have coming in with the yen. A lot of times if they have some sort of news that comes out. So those are all kind of grouped together. Then when we come into overnight, then you're going to get the pound next, right? The pound is going to come in before the euro and the Swissy. So the pound usually affected by it is now also affected pretty much by the everything that's going on with the UK, with the Brexit, with the lockdowns and all that type of thing. So the German courts. So that is somewhat into effect of that too at the moment. Then next you're going to have the euro and the Swissy that's going to open up next, and even though the euro will be the only one that's going to be like the dollar and the euro can't really move too far apart just because of how much the euro makes up of the dollar. So that's the one market I would say is the one that's going to be affected. But the others, they can have their own economic impact. The yen and the Swissy can become a safe haven for at times with the market, but it's tricky. Those markets are tricky because what happens is they can be a safe haven. A lot of times they are. But then if you have a dollar that's extremely strong, that's going to take that market down. So if you look at it, so now if you say if the stock market is weak and the dollar is strong, but then the yen and the Swissy can also be a safe haven, now what happens? Because either the yen gets very quiet and it doesn't move at all, or if the dollar is really taking over, it's going to actually drop instead of rise. So just before you actually try to do something with correlations, which I love correlations. I mean, I look at them like every single day. I love them. But if you don't know what you're looking at yet, be very careful to be just black and white and say, well, because of this, this is going to happen. Because of that, that's going to happen. They are going to change with the economic conditions and with how just things work at different times, and just in general, you know, how we move through each year. I've seen it change. So you have to, you know, be on the ball with it if you really want to study it correctly. Okay. But anyway, let's go into this euro. And like I said with the euro, very, very range bound. So these supply zones are going to be within that range bound move of the dollar. So highest quality, no, but they are there, right? So you know, you can see we've come, actually where we've really come from is, for some reason it did not. I see that happen quite a bit. Doesn't hit in the it doesn't hit in the futures, but I see it hit in the spot, and that's what happened here. We had this level here on the 60, right? Yeah, we'll discuss that into tomorrow. The sectors, if you're looking for the if you're looking for more of the stock market, we'll discuss that into tomorrow. This is more just it's, everything affects us. You know, I think when we first start out and we're just looking at stocks, we don't realize that everything affects us. But once we start looking deeply into things, we realize, yeah, well, the Fed starts this thing, right? It starts it off, and the rest of the world is affecting us. And as we come into our session, you know, what has happened in Europe, what has happened, because even though we can be different, right? Say the DAX can be a lot weaker than the S&P, but if we have a big sell-off in one or the other, we're going to still move together in certain instances, right? You may get to a point where people say, you know what, there's nowhere else to put it, and U.S. is still the best to try to, you know, take advantage of stocks. And yeah, they'll put money in there. That's why we were making new highs for so long, and it still worked. But you know, if you have a global kind of a sell-off going on, it is going to affect all of us, right? So this area we had on the spot market and the futures market, but the futures market I noticed did not come back to it. The spot market did. You can see when we're out of balance, it's quick. I mean, you have to be right on top of it or waiting for it or something. Otherwise, that's when when the greatest imbalance comes. It's not that easy, and then once it starts going, it goes pretty quickly, right? So right now, what starts to happen is we are inside of here. Yeah, you know what you do? Like those of you that are new, you're probably going to say, yeah, okay. I have no idea what you just said. That's okay. Listen over, 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 over. Apply it to the charts. Listen again. Apply it to the charts. When you listen and apply, eventually it just becomes more like second nature to you, right? The first time when I listened, I had no clue what anybody was talking about. I had no clue where a trade was. And I just, for some reason, just got up every day anyway, because I was like, I don't know, I'm just going to try it anyway. I couldn't help myself. And then eventually you just become sucked into it. And then eventually it becomes like second nature to you. But when you first start out, you're just like, I have no clue what this person is talking about. You don't even know if the person talking to you even knows what they're talking about. That's how bad it is in the beginning. You're just believing what they're saying because you believe that they're experts. But really, who knows? They could be just somebody who just started channel, right? So you don't even know who to believe. But then as you go on, then you're like, okay, this is starting to make sense to me, right? And then you start to kick out the people that okay, this person doesn't know what they're talking about. All right, let's kick this person out. So you start to filter out, and then you start to gather your small group that you say, okay, this is who I want to listen to. This is who I want to listen to. This is what I can take out of it, and then grab your little nuggets here and there and make yourself the best trader that you can be. Everybody's going to be a little bit different, but you make yourself the best one that you are meant to be. So, like I said, we're coming off of this 60. Now we have these upper zones, but they are going to be inside of that range and inside of that dollar range. So it's not going to be as high quality. Typically in these situations, you are going to have to watch for opposing demand zones, and don't be so brave and to believing, trust the opposing zones when you're in the middle. That's all I gotta say, because a lot of you still looking for the same trade, from up here as in here. You're not going to get the same trade. Once in a while you're lucky and it'll move, but not always that scenario. So be careful. Okay. Yeah. Well, stick with the higher time frames. You definitely want to stick with the higher time frames. And think of it, if you're thinking about like more of a 401k, think of something such as like a Warren Buffett or something, right? Are they looking to switch positions every couple of days? I mean, that's not. So a lot of times, because we have to have, not that we have to, but we have, sessions often, and then there's a mixture of people. So you got to filter out for yourself what you're looking for, right? Because you have so many different sessions. Either we have different sessions where we filter things out, but if we have just one session and we don't, you have to realize for yourself, listen, I'm thinking more like a very long-term investor. He or she does not jump out of the market every time there's a little swing. They actually almost do the reverse, right? They're probably adding on to position and things like of that sort. So think of it in terms of that when you're looking for very long term. The ones that go day to day, you stick to your higher time frames. And then of course you get your little day traders who, want the smaller time frames. So, you try to filter out in these overall general sessions. I mean, eventually we'll have a breakdown of it all. But for right now, because we just have one, then that's the scenario that we have. But you could see with this Aussie, very much like the stock market, the 240 zone is going to be just like the stock market, where it's in the middle of the range, but you can have bounces, which you already look like you're having. So, but not in a gray area because it's in the middle. The really good area is still lower down below, and we're still holding the supply zone up above with the others up above. So, I don't know if there's a whole lot I think we could go over the yen a little bit, but I don't think there's a whole lot to go over with the Forex at the moment. We can revisit it if we start to make bigger moves inside of the dollar. But for right now, I say a little bit more, being a little bit more careful doesn't hurt you at the moment with this. The yen, again, same thing. It's in between our 240 zones, right? Supply, demand. So it does have some supply, and I'll give you those. But again, actually it fell from this supply. Anybody get in that? It hit our close demand, did take a little rally up here. So we had supply, then we had demand here where it rallied up to there, and then now has fallen even more. I put these areas in, but it is becoming very range bound too as well. Okay, good. If there's a large wick here, so this is two things with wicks with me, right? So I obviously know there's buyers there, otherwise a wick couldn't have been created, right? Like here. However, there's the only thing is there's no If you're just so if you're just looking at this, right? Say for instance you're just looking at this, you don't see that side. So you're just looking at this. However, at the same time it's very easy because you don't see anything there. It's very easy for things to go through with them, right? Because there's no, so there's buyers here, but there's no kind of base for you. So the best thing you could try to do is kind of look to see where it's kind of coming from. So this way, at least you have some kind of a base for it, right? So by now, yeah, it's already used up. But at that time, you can see it still worked again. So the wicks, you just have to be careful of where it's coming from. Uh, it can easily go a little bit lower from there. But yeah, that's what you want to be careful of with wicks. All right, so that's it for today. And again, we're going to keep you updated with what is coming. And so if you still didn't get to email me yet, do so at tradingwithjasmine@gmail.com. And keep liking, subscribing. And like I said, we are really looking forward to, we have some really good stuff for all of you. And hopefully you will enjoy it. And I know you will enjoy it. Not hopefully. All right. I'll see you tomorrow.